Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's see what's going on in the markets and catch up on what the new news is in social media. You want to follow me at Finance, and if you want to join our community, finding-value.com is where we dive deeper into these sectors to find the companies that I think the leverage in the market has. So we still have a discount coupon code called LEAP, LEAP, that is still active. So coming on down, Gergen, my boy Gergen. Bitcoin is dumping like a waterfall. Sorry, I just had to smile at this, not because Bitcoin's dumping, but just the way he said it, kind of funny. It looks like Iran is getting into war with Iraq, but some of these things don't add up. Like Friday, we had this, probably people knew this was coming, so people were positioning in the markets before that was going to occur. They probably got scared at the actual price rises in gold and commodities like oil, and they probably shifted that momentum in the markets. They just had to hold it all down just a little bit further in time to make sure that this was actually going to go through, right? It is always weird how these pieces of information occur while the market is closed during the weekend. I do think that is kind of, weird happenstance is what I'll call it. Gold-backed crypto PAXG now trading $600 higher than gold's Friday closing price. What? $600 higher than gold's Friday closing price? 27%? What is going on there? Is this a precursor to the move that we might see on Sunday night? I have no idea. But this is crazy to see this PAX gold up $600 higher than Friday closing. It's not. It says it's very considerate of Iran not to send missiles during market hours. I thought that was pretty funny because I do listen to some people on YouTube every once in a while, and one of the people on YouTube always comments about these false flag events occurring on the weekend. And I was kind of thinking, like, yeah, that is kind of weird that this is occurring on the weekend when market hours are closed. And he's got this written up there. I'm like, you know what? That is pretty true when you kind of think about all this stuff and what's occurred over the past, few years or so. Here's the debt to GDP ratios by country. Japan leading the race to the bottom of 255%. We've got Greece, Singapore, Italy, and then we've got the United States at 123%. But we are increasing quickly. Not a good thing. Not a good thing is what I'm saying. I believe it's pronounced anus, anas. I don't know. But sales of electric vehicles declined by 9% in Europe last March. Wow, 9% decline. I thought these things were going to take off like candy. Like 6-year-olds eating Starbursts or something like that. But looks like they're struggling to sell these things, and looks like the market doesn't want electric vehicles in the quantities that maybe some of these tech people think they will be adopted at. But maybe Monday's price with this potential war going on will elevate oil prices to a level where people wish they own electric vehicles. Maybe. Scrolling down to the Gladiator, everyone going to spend the weekend scrolling for updates on the Iran-Israel conflict. What they should be doing is researching junior mining explorers. What's funny is there are some really good junior mining explorers that I think I have in my stable of my portfolio. And if you look, we can see positioning in those mining companies before the breakout is occurring and before the war is occurring. And you know what that means? Means people knew that this was coming before it actually came. People are positioning money into some of these asset classes before they are actually breaking out and taking off. And we can see the money flows coming into these sectors. And that is why we are positioning in these sectors before we know what the news is. That is the entire name of the game, to see how the money is coming into the system, to watch how the herd is lining up these moves, and then positioning before the actual big move occurs. Because people have insider information, they know what's coming. Forget about war, gold soaring because global debt is skyrocketing exponentially. Governments seem clueless about the repercussions. So here's something that I think people get wrong. And again, this is just my opinion. I don't think or forget about war. The global debt skyrocketing is leading to the war. So they're going to blame the war for all of this, but it was already in motion by all of this global debt skyrocketing exponentially. So they're going to blame it on something. And I think that war came about from the global debt skyrocketing. That would be a potential root cause. And they just need something to blame. Oh, it was the war. That's what's causing gold to surge higher. Uh-huh. Sure it is. Following the process to perfection, Nvidia says nothing more beautiful than watching a diamond top play out for one's private perusal. Enjoy. This is, I think, wave 4 is that usually goes sideways like this. Wave 5, big blow off top, and then eventual decline potentially. We'll see for Nvidia. Tech stocks, I don't think are going to like this war that's coming up, but that's also something they can blame it on. We were already peaking, or the beginnings of a peak. That's why our boys Bezos and what's his name, Bill Gates and Mark Zuckerberg already left the building. They've already left the stock market and sold a lot of their shares up there. Do you think they knew what was coming? My guess is yes. And the Walton, I think the Walton sold out too. CEO technician Bitcoin dumping 5% on the drone attack headlines. Interesting. Nice little dump there. Now, I wouldn't be too scared. It's probably going to come back, or maybe not. Iran attack on Israel. We've got over 50 Iranian drones have been launched towards Israel, set to take several hours before reaching Israeli airspace. Drone attack activity sighted over Iraq. Airspace of Iran, Jordan, and Israel set to be shut. Israeli military and air defenses on high alert. First direct Iranian attack on Israeli territory. Stuff where they were shooting down drones. So I don't know how this is possible, but if it's set to take several hours before reaching this airspace, how are they shooting them all down? There are some weird things that go on with some of these videos being released and some of the information that's being released at the same time. Conflicting is all I'm going to say. Robert says, can someone please explain to me how silver can gain over 5% and then lose it all and then some in one trading session on Zero News? What the actual F? Well, here is my guess. I think that the cabal or the people in charge were getting scared that the move in gold and silver and all these commodities were going up too quickly. So they actually had to reverse the momentum lower on Friday because they knew that something was coming on Saturday to probably make the move pretty big on Monday. That would be my best guess. Now, is that going to be right? That guess, I don't know. But we'll see what Monday has in store for us. It's probably going to be a big move in commodities, maybe. And maybe they tried to slow the momentum in the move down on Friday before that occurred. Major investment firms and institutions continue to plow cash into Global X Uranium Nuclear ETF URA as it reports 860,000 new ETF shares created in the past week. Its AUM has now hit a new all-time high of 3.23 billion. So that's good. We're seeing some positioning in uranium, and maybe this is going to skyrocket too with all of the war news going around. But it's always good to see more money flown in. We've got Cash App here. He says, ignore rates, focus on liquidity. Says there's a reason the Fed officials and MSM want you to focus on rates. It works to their advantage. The Fed gets to say it is doing its job by controlling inflation by keeping rates higher for longer. The MSM reports rates are restrictive, hoping that repeating the message will lower inflation expectations. This is the magician's trick, getting people to look one way while the science stuff behind the trick happens elsewhere. I wrote about this in this December macro, so time for an update here. So what he's saying is it's all a facade. He says, first off, banks are lending again. Note how borrowing started to take off just after the November FOMC when the Fed hinted at changes to the SEP. So bank credit is continuing to go up since about December of 2023. Non-farm payrolls never even blipped. Labor conditions are tight, higher rates are hurting a lot of people, but that doesn't show up in the payroll numbers. Meanwhile, the Treasury keeps draining the RRP, the reverse repurchase agreements, to fund the runaway deficit. Federal debt now stands at about 35 trillion bucks. That's $103,000 per US citizen. Maybe less if you count all the illegal immigrants who will magically become citizens in times for the polls. Stimulus checks. So this is federal government current expenditures in terms of interest payments. So interest payments sent to wealthy asset owners increased their asset purchasing power and caused asset price inflation. We've got a lot of this stuff going in the background. I'm not going to go over all of it, but focus on liquidity, ignore the rates is what he wants to focus on. Katusa says copper has outperformed the S&P 500 since 2001, though it's also seen several year-long periods of sustained price declines in between its peaks. With the correlation of 0.54, copper prices and stock markets aren't perfectly aligned. But copper remains a reliable barometer for economic trends. Also overlaid on the chart are the last few rate cuts by the Fed. As you can see, many of the easing cycles overlapped or were directly followed by strong copper price gains. So here's an easing Fed rate cut and copper took off. Another Fed rate cut, it dropped slightly or a lot actually. Another cut and then boom. And then a cut here in 2020, boom. A lot of those cuts are also lined up with liquidity coming into the market too, which caused the price movement, a lot of this stuff. BlackRock's Larry Fink, he says, if inflation was measured like it was in the 1980s, with a heavier emphasis on food inflation, housing, and interest rates inflation, inflation would be 12%. That is exactly what I feel is about a 12% inflation rate. I would agree with that. I can get on board with that. Here's S500. Bears going gap hunting this weekend. The February gap starts to fill at 503 bucks and we're at 510. So first gap down here. So he thinks that maybe we could head lower being a bear in the S&P 500, and I do think that's a possibility. Gold will soar to $2,700 by year end, says Goldman Sachs. Oh, that's an opinion there. Who thinks we're going to overshoot 2,700 bucks? We'll see. Josh Young, narrative violation. U.S. total liquids production, oil plus natural gas liquids, has effectively not grown for 2 years. You can see where we're at, and then you can go back 2 years to where we were producing back then. So it hasn't grown for 2 years. We kind of maybe even peaked out, and maybe we're going to head lower here for U.S. total hydrocarbon liquids production. First Majestic, we've got Keith Newmeyer. He says, this reminds me of the early 2000s when the tech bubble burst and capital flowed into mining stocks. It was a 10-year bull market, both silver and gold, 10x'd. I don't think it would be impossible to see those gains into this next run, in his opinion. And you know what? I agree with that. I do think it's like the early 2000s still. Like we haven't gone through this tech bubble yet, and it's still pretty early. So yeah, I would agree with that. The IEA warns attacks on Russia refineries may disrupt the diesel market. Says Ukrainian drones have ramped up attacks on Russia's oil industry this year in an attempt to disrupt fuel supplies to the military and curb the Kremlin's revenue. About 500 to 600,000 barrels a day of the country's crude processing capacity could be offline this quarter on a gross basis before offsets. So it looks like somebody is attacking their potential refining capacity here. HFI Research, which I agree with this comment, says if global oil demand grows at 1.9 million barrels per day, like Vital thinks, then we are in for a very fun 2025. By the end of 2024, velocity of production growth from non-OPEC will fall to 450,000 barrels per day, while demand will be at 1.9 million barrels per day. So Saudi can unwind the cut with ease, in their opinion. Now, here's the thing. We've never had this few million barrels of spare capacity in the system. And I don't know if Saudi should even open that up, because I would think you want some sort of spare capacity in the system still. Gonna get interesting here, boys, in 2025 for oil price. The Russell 2000, important chart. A breach of the rising wedge is extremely bearish. Two scenarios depicted below. There isn't a third. It's over. A rising wedge, a breakout to the downside, and he has two areas, kind of like a back test retest, or an ABC correction that doesn't go up as much, in his opinion. Jared Dillon says, I would never suggest hodling anything. Not Bitcoin, not gold, not stocks. There's always a time to sell. Yet, gold broke out of a 13-year consolidation merely a month ago. If today's price action makes you nervous, you have paper hands. I agree with that. And the big move in gold, I think, is setting up here. It's looking good. U.S. younger generation is in a tough spot career-wise. They need to find something that a computer, an illegal immigrant, and someone overseas can't do. And this has to be true over a decade or two. Not a lot of clearly good options. I agree with that. I think it's really tough to figure out what to do for a new, younger person, like a new person coming into the working force. Like, what the heck do you do? And the only thing I can think of that would be, I think, a really good bet is doing something in like plumbing, woodwork, like woodworking. It could be cabinetry, those types of things that you work with your hands and build that people really cherish. So that's the only things I could think of. And I don't think a computer or maybe an illegal immigrant could do it, but I don't know about a computer. Euro versus dollar, pay attention. Flight to safety is accelerating. What happens next ain't for the faint-hearted. And we've got the euro potentially dropping out of this diamond pattern. And we've got the dollar working its way to the upside. Dollar strength, euro weakness. Cross-border capital says, whoops, latest nowcast, GDP Fed rate. So I talked a little bit about one of our Q&As here where I said, we just went through a slowdown, not too recent. And this was the slowdown I was talking about for GDP economic momentum indicator and the terminal FF. You can see we kind of peaked out in June of 23, and then we slowed down till recently, and we've been working our way back up. So that's what I mean by the recent kind of weakness. Did we already go through it and people just didn't realize it? Yeah, maybe. Whoa, North Star, he's jumping on the bandwagon, guys. Crude oil, 350 target by 2027. I love it. So here's a 44-year resistance line. Also needs third touch to confirm. We've got oil doing basically a retest here, which I agree with. And the dotted green line is the projected path of the 3-year moving average. So here's that resistance line going here. We've got that at $350. Who knows if we can get up to this upper level line, which is up around like $1,000 or more. I don't know if that's going to go that high. Who knows? But the chart does look pretty good. We also broke last time this resistance line through here, and we just shot higher to 140, which people would have thought is unheard of. I have a feeling that something like that could occur, where we go to a level much higher where people are like, there's no way it can go that high. Well, we're going to find out. JC Parrott says, here's what fake internet money looks like versus real money. Well, we'll see where this breaks, but Bitcoin was breaking lower while gold futures was breaking up. So we'll see. Equity market volatility and inflation expectations are the most significant positive correlation we've seen in decades. This is unmistakably stagflationary. Although the chart below doesn't extend as far back, a similar phenomenon occurred in 73-74 as markets faced difficulties whenever inflation reaccelerated. This is especially pertinent now with energy prices, agricultural commodities, precious metals, copper, global freight costs, and other inflation indicators showing a significant resurgence. There's only a few times in history where we've got the VIX index and inflation expectations both higher. We had it in 09, 2010, 09. Looks like 07, 08, and then also 99, 2000. And that's where I think we're located, is somewhere in here. And that's what I've got for today, guys. So hopefully you enjoyed the content. Give me a thumb up. Give me a thumb up. Leave some comments in the description link below. Sign up to the website if you guys like. Sign up to the YouTube channel. Become a member. And that's all I've got for today, guys. So we'll see you guys next time. This is Finding Value.